Hello, everyone, and welcome to the Property Podcast. It's a big episode this week because we're making big predictions. Yes, we're going to reveal what we think is going to happen to the UK property market this year, where the best places to invest are this year, and also talk about inflation, FTSE, Bitcoin. Yeah, we've pretty much got the lot here. So we may end up looking smart, but we're probably going to end up sounding a bit silly.
Welcome to the Property Podcast. Thank you for joining us. This is the show where we take time out from advising a multi-million pound property fund and arranging hundreds of transactions every year for our clients and bring you a little bit about what we've learned along the way. Now, we are on a mission to make this the best January ever for the Property Podcast. Being completely honest, we really want to crack 500,000 downloads in a month for the first time ever. And to help us do that, we started this year with a 4-part mini-series designed to help you have your best year in property ever. So if you've been in property for a while, but you just want to have a great year, then there's loads in there for you. But also, if there's someone in your life who is newer to property, they've been expressing an interest, they might have even said to you they want to invest this year, then please do pass this podcast along to them, because that mini-series is the perfect place for them to start, and it really helps the show as well. So do make sure that you are subscribed to the Property Podcast on Apple Podcasts, on Spotify, wherever you listen. And if you could pass the show on to a friend or drop it into one of those group chats, take a second to do that. We'd really appreciate it, and you can help someone else out too.
So it's time for our news story of the week. And this week's headline reads, JP Morgan is about to spend $1 billion on hundreds of rental homes across the US on its way to becoming a mega landlord. Rob, I don't know if we've got lost, because normally we focus on the UK market, and this very much seems to be a US story.
It is completely a US story, but I just thought it was really interesting because all the things that people are thinking about the property market in the UK, it's exactly the same in the US. The US had a very similar bonkers couple of years, actually more bonkers in places. And now all the pressures on the housing market are exactly the same. So the fact that you've got JP Morgan coming in and investing $1 billion, I'd say is a pretty encouraging sign for the property market, because clearly they don't think there's going to be some kind of imminent nationwide collapse, or they wouldn't be doing it. The other thing is that this isn't just going in and hoovering up existing stock, which we've seen big players do in the past. It's not like they're seeing a buying opportunity to acquire properties on the cheap in a weak market. This is actually built to rent, so they're making a long-term commitment to come into this industry and stay there. So while this is a US story, Rob, I still think this is highly relevant because, as we know, what happens in the US tends to ripple out to the rest of the world.
Absolutely, and build to rent is a prime example of that, because the build to rent market in America is so much more mature and advanced. It is way ahead of where we are in the UK. The UK is just getting started. Like, we're putting on our trainers, we haven't even got out for a run yet. And America is certainly at least warmed up and possibly already striding out onto that long run. I don't know where I'm going with this, Rob, but what I'm trying to say is that America is far ahead when it comes to build to rent. So we've not made the news section an international section yet, but it is useful to look around the world to see what's happening so we can learn from it as well. Now, we've said we want to make January the best January ever for the Property Podcast. Well, Rob D, you're certainly helping out because you have fantastic news, and it really is fantastic. Rob, you've signed with a major publisher, and I'll be honest, if you asked me to name 5 publishers, I'd probably struggle, even though I read lots and lots of books. But it's a publisher that not only I have heard of, but pretty much everyone's heard of. You've signed a book deal with Penguin Books, and not only that, you've got a book to bring us very, very soon.
Yeah, I have. And I'm so excited because I've been publishing my own books for 10 years, basically the same amount of time that this podcast's been going for. So to reach a point where it got Penguin's interest is just phenomenal. And a big part of it is thanks to the people who listen to this podcast for getting behind it and making my most recent book so successful. So thank you to you if you helped out with that. But yes, I do have a new book coming out. Well, sort of. Penguin is releasing an updated and expanded version of my most recent book, The Price of Money. So over the last month, I've been working hard to update the book. It's unbelievable how much has happened in just 6 months. But expanding it, written a whole extra chapter to go at the end. And it's coming out on the 30th of March. But if you're as excited as I am about this, okay, you won't be excited as I am, but if you're somewhat excited about this, then you don't have to wait until the 30th of March because you can pre-order the book now. It's going to be available literally everywhere. So you can find the links to every retailer that's going to be stocking it at a dedicated website for the book, priceofmoney.co.uk, which we'll be linking to in the show notes as well.
Okay, so if you're super keen, head over to priceofmoney.co.uk. because let's face it, Rob, as a subject, when you wrote the book, it was a really useful book. But so much has happened then in the world, particularly around the core topics that you've written about, which obviously one of the big ones, inflation. And I think it's important that you have gone back and written more, updated it, and added to that book. So I think this is a type of topic that everyone must understand, and a second copy is well worth getting. But you're a generous guy, Mr. Dix, because not only have you made the book even better, but as a thank you to those who bought the first book, or even if you haven't bought the first book and you're just going on to the pre-order list, basically anybody who goes on and pre-orders, they're going to get a video course from your good self, which for me, for the price of a book, that is probably the best deal people will do in property this year.
Well, that was the idea. I wanted to think, what can I do that's extra? And what can I do where you don't have to wait until March? So this course is what I spent my Christmas doing. It's about 2 hours long, and it's me walking you through the key concepts from the book. So the idea is, if you've read the book already, it's the perfect summary and refresher of some of the most important ideas. And if you haven't read the book yet, then it's a way of giving yourself a grounding in those ideas. So by the time the book does land with you and you read it, you'll get even more out of it because you're already familiar with some of the key concepts. So if you do pre-order, then you'll get delivered that course instantly and you can start watching it right away. Then the book will arrive with you in March.
I love that, because there's so many books that I read, even if I've marked them or make notes elsewhere, you're like, have I missed something? Have I absorbed all the key lessons? And that will make sure that you get all the key lessons. So 2 hours of Mr. D for the price of a book. That sounds like some deal to me. So if you are keen, go to priceofmoney.co.uk, pre-order a book, and then you can immediately get access to that video course. So what are you waiting for? Head over to thepriceofmoney.co.uk. And finally, Mr. D, my good friend, congratulations. This isn't something that's just happened out the blue. This is 10 plus years in the making of all the hard work. I know people can't speak back to you on the podcast, so I'll do it on their behalf. Congratulations and well done.
I've been really enjoying this show so far, Rob. It's going to take a turn for the worse now because we need to make some predictions. And I can't believe we're back doing this again after last year. If you haven't listened to our recent episode where we recap last year's predictions, don't. But we do this every year. We make a set of predictions in January, then unlike pretty much anyone else, we revisit them in December and hold ourselves accountable. This year, as ever, we're going to be making predictions for house prices, the top performing cities, interest rates, inflation, and a few other things besides. And before we start, I do think it's worth saying, especially in the light of last year, that any predictions over a 12-month timescale are basically entertainment only. Nobody knows what's going to happen over the course of a year. You shouldn't be making investment decisions over the course of a year anyway. It's a long-term thing. But nevertheless, it's fun to speculate. So that's what we're going to do.
We are going to speculate. But I tell you what, Rob, to give us some credit, the area that we seem to be pretty strong at is picking the areas that are best to invest in. We're never 100% perfect, but we are up there year after year with picking the best places to invest. It might go downhill after this section, and you never know, we might mess up this year. But we're going to start with what is supposedly our area of strength and picking the best areas to invest. So let's not go one by one. Let's get them all out. Where are your top areas to invest this year?
Okay, so we judge this by the Home Track Cities Index, and there are no real surprises in mind. We obviously looked at what's done well recently, and I've been trying to look at trends, and so they break it down so you can look at the last 3 months. Okay, well, which regions are holding up the best over the last 3 months? And it's not got me to any major revelations. So my main three are Nottingham, Birmingham, and Manchester. They've been up there recently. I don't think anything's going to change there. And as a slightly longer shot, I'm going to throw Cardiff into the mix. Cardiff has been performing well recently. Is one of the ones to watch on our hotspots list for this year. I think it's got an outside chance of cracking the top 5 this year.
Okay, well, mine are very similar, so I'll do this quickly. Mine are also Nottingham, Birmingham and Manchester, but the one I would add to the mix is Derby. Derby was an area that we picked as an up-and-comer last year, and it actually exceeded our expectations and was one of the best performers in the UK. And there's loads of reasons why. We go into detail in the recent YouTube video that we've done where we pick out the best areas. So if you want more depth behind the reasons for these places, then go and check out that YouTube video. But mine are also Nottingham, Birmingham, Manchester and Derby.
Great. Okay. Well, that means you get to go first on this next one, which I'm glad about, because it's a tricky one. And it's probably the one that everyone's going to be the most interested in, which is UK house prices as a whole. So we judge this using the nationwide house price index. Where are we going to be at the end of 2023, Rob? Is the property market going to be up or down, and by how much?
I think it will be marginally up. and I think it will be around 2%. And I'm going to give myself a 2% swing either way. So as much as up by 4%, which may sound pretty optimistic, or zero, flat. So somewhere between 0 and 4%, but the number I'm looking for is around 2% up overall. Rob, I think there's more to say on this, but before I do, let's share, because I'm feeling quite exposed with that prediction. So what are you saying? What are you going to do?
Well, as is consistent with past years, we're not far off. I'm just going slightly more conservative or negative, depending on how you look at it. What I've got is plus or minus 2%. So I'm giving myself the same range that you are, but just a little bit lower. So I think it could be as high as +2 or as low as -2. So we're not far apart, but you're right, Rob, there is a lot more to say. And I think it's worth saying that even though I've got a minus number in there, potentially, these are looking wildly positive in comparison with the other predictions that pretty much seemingly everyone else has put out this year.
It is. I mean, Halifax is saying -8 as an example. So that shows in comparison how positive or upbeat our predictions are. We're not doing it to be positive or upbeat. If we could just be delusional and say it's going to be up 15% if we wanted to do that. But it's what we truly believe. I don't know why I want to do this, but with UK property prices, I feel like I can map out the year, which is going to really hurt me in 12 months. Now I've said this. But the way it looks to me is that Q1 will be the worst quarter of the year for property prices. And I think closely followed by Q2. I think it'll be close. I think both Q1 and Q2 won't be great quarters for the property market. I don't think it's going to be a catastrophe. I just don't think it's going to be great. You have to remember the Q1 data is lagging in a way because the transactions were happening in Q4 last year. So you can already see the direction of travel. So Q1, I think the numbers reported won't be very good. And I think the media will jump all over that. So beware, you've been warned. Q1's numbers won't be that great. Media will tell you property doomed, it's over, blah, blah, blah. We've heard it before. They do it every time. But I've told you it's going to happen. So when it happens, we can talk about it on the podcast. So that's Q1. Q2, as I've said, it will be pretty grim. And then I think the second half of the year will be stronger. And that's where I feel we can get back to the sort of positive territory, if it has indeed fallen at that point, that I've based my prediction on. So I think it's going to be a tough Q1, probably a tough Q2, certainly not a good Q2. And then with more optimism coming back into the market. And I promise we will talk about this more in the future, but I see lots of reasons why the market will recover. One of them, for example, is I see the mortgage market settling, margins on those mortgage products reducing, and lending becoming easier again. It's not impossible at the moment. You can absolutely get a mortgage, but it's not great. You know, it's not a great market to operate in. I think by the second half of this year, it will have sorted itself out, which will then help the property market start to move again, amongst other things. So probably the most detailed prediction I've made around UK property prices ever on the podcast. And I may be nuts for feeling confident on that at the moment, but I am. So we'll see. And I think this is worthy of a podcast in itself, the reasons behind our belief of where the property market's going to be this year, because that thinking, I think, will be useful for you as a listener to understand. So in the coming weeks, we'll talk about the property market and what it's going to do this year and why we believe it's going to do what it's going to do this year. So that is absolutely a podcast to look out for. As we've already said, we're trying to make January the best ever for the podcast. So this will be added to it. And because we've got so much coming out at the moment, it'll probably be the best February as well. So make sure you are subscribed if you're not already. But Rob, let's move on. Another subject we tackle every year, or a prediction we make, is London. We always look at London because, let's face it, it's an important city, right? It drives the economy for the whole of the UK, whether people like that or not. It is true. London is such an incredible city. It's an international city. It's a juggernaut financially, and the property market is incredible as well. But it's not been incredible over the last few years. In fact, it's been a really poor performer. So what are we looking at this year?
Well, I hope that I'm not making the same mistake as the forecasters you talked about earlier, who just sort of say what's happening now and then up it a bit. But for me, this seems like a pretty straightforward one. I don't think it's going to be a good year for London at all. And I'm sure we'll get into the reasons for that more when we do that episode about how we've come to our predictions this year and our thoughts about the market in a bit more detail. But this is probably the prediction I'm feeling the most confident about. I think London as a region is going to be the worst performer this year. And I think on home track, London is going to be one of the bottom 3 cities in the list.
I agree with you, and I'll just add to that I think London will fall in value this year. I don't think it'll be dramatic, so I don't think if you're a London investor, you need to panic. And in fact, that may even present opportunities. It will for the savvy investor. So you don't need to be scared if you're an investor in London. And it is only a 1 year prediction, remember. This is not us saying, London's going to be a bad investment for the next 10 years. If you want the answer to that, I think London will be a fantastic investment for the next 10 years. But this year, I think it could see a minor fall. I don't think it'll be a massive fall, but I would actually be surprised if London ended up in a positive territory when it came to capital growth.
Yeah, completely agree on that one. But also agreed that 1 year in isolation doesn't mean much. Even though it just sounded very negative, I've got no interest in selling what I currently hold in London.
So the next two subjects, Rob, as an author on these subjects, I feel that you should be nailing them, really. And they are interest rates and inflation. So I'm going to let you lead. Please do let us know your thoughts on interest rates and inflation, because you literally have written the book on the subject. So please, go ahead.
Well, I went to great lengths in the book not to put any numbers in print because they'll sort of go out of date very quickly. But I'm happy to have a go here. But I'm going to get my caveats in up front. This stuff is so hard to predict, especially over a year. I think it's relatively easy to get the direction of travel right and kind of know which way things are going. But to get the magnitude and the timing right is exceptionally difficult. But that's not going to stop us from trying. So interest rates and inflation, very much linked. So I'll go with inflation first. I think it's going to finish the year at a rate of below 5%. And as a result of that inflationary pressure coming off, I think interest rates are going to be relatively contained. I don't think we're going to see any more big increases like we've had over the last year. So I'm saying that the base rate is going to peak below 4.5% and end the year below 4%. I was tempted to go lower on these, but it feels too risky. I could just end up being even more wrong. So I'm going to say inflation below 5%. Interest rates go no higher than 4.5% in the year and end the year at 4 or below.
So my interest rates prediction is similar. I'm maybe just going to say the same, but in a different way, which is that as we record this today, interest rates at 3.5%. I believe that they will go no more than 1% higher, like you do, Rob, and they'll be somewhere between 3.5% and 4.5% by the end of the year. So it's not going to be as dramatic of a year. And I'm not really going to make a prediction for inflation because I think it is so hard to predict, a bit like interest rates, I suppose, but because any volatility in the world could set it off one way or another. But with inflation, I'm not going to make a real prediction. I'll just comment to say it'll be less than last year in 2022, which I don't think is a big prediction. But then again, a bit of volatility in the world could see that wrong. But the way things are looking at the moment, I don't think it's much of a big prediction to say that inflation won't be as high as last year in 2022, which will be a good thing for all. Oh, I love our portfolio app, and we're on a mission to open up the benefits of property investment to as many people as possible. And we are doing that with the mobile app Portfolio. Remember, Portfolio provides what we believe is a completely new way to access the potential benefits of property investment, while feeling just as involved as if you owned a buy-to-let. You can find out more about investing through Portfolio at portfolio.co.uk.
Okay, so we've done property, which is supposedly what we know about. We've done interest rates and inflation, which is what I've supposedly written the book about. But as if putting ourselves on the line for those wasn't silly enough, now let's step way outside our comfort zone and start making some wild predictions about other things. So we always make a prediction about the FTSE 100. Last year I said it was going to end lower. When we recorded the podcast, I was wrong and I got a cross in the box for that one. But I was actually right at the end of the year, by the way. So I need to get that in there. But this year, at the time of recording, it is at 7699. I'm going to go lower again. I'm not going to put a number on it. I'm just going to say lower, not for any particular reason other than same reason as last year. The FTSE 100 always seems to disappoint. So even though the constituents of it mean that relative to other indices like the S&P 500 in the US, it should do pretty well, it seems completely incapable of staying above 7.5 for any sustained amount of time. So my bet is lower from here.
The FTSE 100 is a really interesting one. I think it'll be similar to property. I think it's going to have a tricky first quarter. So I don't know why I'm even putting my neck on the block and making this harder for myself, but I think Q1 will be down. I think at some point there'll be a 10% correction, either where it's from now or at some point later in the year. But I can see that happening. I can see that volatility being in the market in the next 12 months. And I think overall for the year, I think it will be down. But I think the first half of the year will be the worst half of the year for the FTSE. Wow, I've just made a 6-month prediction as well. I'm going to quickly move us on, Rob, because I seem to have made a lot of predictions around one subject and now I'm feeling nervous. So let's move on to a subject where at least I've been absolutely awful at predicting, which is Bitcoin.
Well, yeah, I mean, mine wasn't good last year either. I think I managed to be technically right on half of it, but it was a bit of a cop-out. Here's what I think about Bitcoin. I think you're not going to hear much about Bitcoin this year, but I think it's actually going to be one of the better performing assets of the year. So one Bitcoin is worth currently about 17,000 US dollars. I think it's going to finish the year above 20,000 US dollars, but I think it's going to get there without much excitement. So in past years, we've seen absolutely wild swings. We've seen absolutely crazy runs and then plummets back down again. This year, I don't think that's going to happen. And that's why you're not going to hear much about it. But if it does go from 17 to 20, then that'd probably make it a better investment than lots of others you can make this year. This isn't me saying that you should invest in Bitcoin. I'm not saying you should invest in anything. I'm not saying that I'm particularly going to invest any more than I've already got. But the point is, I don't think you've heard the last of it. I think it's going to be a boring year. It's absolutely in a bear market. It's a crypto winter, as they call it. But when you look at everything that's happened over the last year, I think it's had just about everything chucked at it. So I think there is a flaw in there, and I think it's probably pretty close to it. So I think it's very slightly upwards from here. And maybe in another couple of years' time, if we end up with a broader boom underway and everyone starts getting excited again, you could start hearing about Bitcoin again. But this year, not so much.
Well, I'm glad we've done Bitcoin, Rob, because at last we've got a bit of a difference in our opinions. So will it be a quieter year for Bitcoin in terms of the headlines? Yes, I think it will. I agree with that. But Bitcoin will not be boring. Bitcoin, for me, will still be volatile. And it's not an asset that you can trust in that sense. Because for me, the volatility makes it uninvestable. In fact, Bitcoin really shouldn't be an investment. That's not what it was made for, but that's a whole different subject altogether. So I think this year, Bitcoin at some point will go up by at least 20%. And at some point this year, it will also fall by at least 20%, which is volatile. And you may go, well, it's Bitcoin. Of course it will. But if that was any other asset class, that would be an incredibly wild year. But for Bitcoin, that's kind of the norm. And that's why I want to make this prediction. I think it will continue, even though it'll be a quieter year, to still be volatile. So I think at some point, Bitcoin will be up 20%. And I think at some point, Bitcoin will be down 20% from a price at some point in the year. I'm not saying from its current price, but it may go up to 20,000, like you said, and then fall back to 16. So that would be its 20% drop. So that's how I see the year ahead for Bitcoin. But I'm glad we've got a bit of a difference, Rob, because when we come to the end of the year, this could be the one that swings it for us to see who's won.
Maybe it will. It's all relative, though. I think the point you make is really important. Because if you did have just swings of 20% in Bitcoin, that would count as still as a quiet year based on what it's been like in the past. You're right, though. It wouldn't compare to anything else. And that's why whatever you believe about the technology and its place in the world system and everything else for the long term, at the moment, it's firmly in the speculation bucket. Well, let's stop there before we get tempted to make predictions about things we're even less competent to have any kind of view on. But that's what we believe is coming up in 2023. And as we said, lots coming up in the next few weeks with more detail about how we've got to some of these. So do make sure you're subscribed and keep on listening. Because as Rob said earlier, I think the first quarter of this year is going to be a particularly interesting one. So you're going to need to know what's going on. Okay, before we wrap up this show, just time for Hub Extra, that part of the show where we give you a little bit extra, often in the form of a resource or something that we've enjoyed that we want to pass on. And Rob, that's what it is this week. You've got a book for us.
I have, and I didn't expect myself to buy this book. I bought this book because Amazon recommended it to me, and I looked at the reviews, and the reviews were very, very good. And the book is called Be Careful What You Wish For by Simon Jordan. Now, Simon Jordan, if you don't know him, was the owner of Crystal Palace. I say was because it was in the past. He no longer owns Crystal Palace. And he is still very much present in the day-to-day media. I believe he's got his own radio show. A divisive character. He's one of those people that people seem to love or hate. I didn't really consume much of his content or stuff that he puts out previously. But I thought, you know what, I'll give it a chance. I'll buy this book. And I'm glad I did. He is absolutely a divisive character, and that comes across in the book. That, my opinion, has not changed. And some people will read the book and end up not liking him, and some people will read the book and end up probably loving him. I actually still don't know what to think of him. But what I do appreciate is the book that he's written, because it's a story of him on the up, how he was able to buy Crystal Palace, which I think is an interesting business story. But why I really like the book is the raw honesty of his interactions in the football world. As a football fan, you are just used to the media sound bites, players going on about game by game. They're all really well trained now. And I understand why. So you crave that honesty, you crave the rawness of what's actually happening behind the scenes. And he delivers that in this book. He talks about his interactions with managers, with agents, with players, some good, some not so good. And that interaction I found fascinating. And I think it takes somebody to leave the game to be able to talk that way. I think it'd be very difficult for any footballer, agent, or club owner to talk like that while they're still involved in the game. So by him exiting the game, and yes, a bit of a spoiler there, but by him exiting the game, he's able just to let loose. So if you have even a passing interest in football, I think you'll enjoy this. Rob, I know you've recommended a football podcast in the past where it's about the business of football, and that's an interesting podcast. I wouldn't say it's the same, but people who enjoy that podcast would probably enjoy this book as well. So if you're looking for a book to kick off your year, while you're waiting for Rob D's new book to land, and remember, go to thepriceofmoney.co.uk, you can check out Simon Jordan's book.
Well, I do only have a passing interest in football, but that sounds right up my street. So that's already gone onto my wish list while you've been talking. Well, that is it for this week, but so much more to come on the Property Podcast. So we will be back with Ask Rob and Rob next Tuesday, Property Podcast again next Thursday. And in the meantime, please do go check out our New Year Kickstart mini-series if you haven't already, and share it with anyone in your life who you think might benefit. For now, though, have a great week and we'll see you soon. Bye-bye.
Bye-bye.